What's good, everybody? I just took the best trade ever in my short trading career so far. I mean, I just absolutely fucked the market. I ain't even gonna lie to you. I caught the shit like the back of my hand, but this is literally what I practice. So, not really too surprised. I'm a little bit surprised my mentor didn't take it because I learned from him, and I thought it was just an easy setup, but he was saying he thought the market was more bearish and I was more bullish. I didn't check what he was looking for before because I like to trade for myself. But after the trade was done, then I went and checked in and I was like, oh shit, he didn't take the trade. But to me, it was extra clear. Like it was the most simplest trade ever. But I guess that's just how everybody sees the markets. It's different for everybody. So I'm gonna start with a naked chart and just show y'all what I was looking for going into the day, which was 30 minutes ago because I arrived at 9:30, like right at 9:30. I was just opening up my charts, and that's all it takes for me because if it takes me like 5 or 10 minutes to identify what the market's trying to do, I probably shouldn't be trading. Like for me to recognize this, the market is going up. That takes 1.5 seconds for me to look at and determine where the market is more likely going. Look at the order flow. We got a low, higher low. It looks like we're making a higher high, and it looks like this didn't quite come back. Maybe it was a SMT, and then we took this high right here. Market came back to a fair value gap. Now it's going higher. So it's just internal, external, internal, external. The market impulses out, away, comes back, touches the, or makes a retracement, and then continues to trend. So to me, it was easy to see where the market was going to go because it's just day one stuff. So when I came into the day, I was looking at this fair value gap right here on the 1 hour, I mean on the 4 hour. I was like, oh, so the market looks bullish. We're coming in and we're respecting a fair value gap. And on the 1 hour, it's a bigger fair value gap right here. So maybe I'll mark this instead because I was looking at both of them. And we're also like kind of sweeping this low right here too. So already, I'm gonna just write it out so I don't lose track. The 4 hour is bullish. That tells me which way I'm trying to trade. I'm trying to trade up because we're bullish. The market's going up. And I want to follow higher time frame order flow. So the 4 hour is bullish. We come down into a 4 hour FEG, 4 hour slash 1 hour um, FEG tag slash 1 hour low sweep. So it's like a couple things lining up. So the 4 hour is bullish, 4 hour slash 1 hour for value gap tag slash 1 hour low sweep. All right. So we got the direction, which is first. We got to know which way we're trying to trade. Next, we got the PD array, the point of interest, the key level, whatever you want to call it, is where we're gonna look for a trade at. After that level gets hit, we drop down to a 5 minute or a 1 minute. I drop down to the 1 minute. So after we hit that key level, I drop down to the 1 minute. Through a long position tool, I got in right here. Once I saw this candle, I got in around here. I saw that candle rejecting right here, this 1 minute green candle. I saw that rejecting this fair value gap, this tiny fair value gap. I was like, okay, it looks like market wants to hold bullish. We're inversing this fair value gap over here. Then this candle that I entered on, I entered kind of early because if you want the most confirmation, you'll wait for this market structure to be broken right here. So this is a swing high, swing low. You want to wait for that swing high to be broken before entering because it gives you the confirmation that the trend is changing on that time frame. But I saw that rejection, so I entered maybe a millisecond early. It was like a couple seconds before that candle closed and showed the market structure break. And I just targeted the highs. That's where the market wanted to go because the market took liquidity down here. That's all I trade. I trade liquidity sweeps and fair value gap tags. So the market went below these lows, took all that liquidity and tapped the fair value gap. Those are two main areas that the market likes to reject. And after that happened, look what happened. You got two big ass green candles. Look how many candles it took to get down, like on this last leg. One, two, three, four, five. You just wiped all five candles out with two candles, basically. One, two. That's smart money showing his hand that, hey, they're into the market. That's displacement. That's big movement. That's showing that, hey, order flow may be flipping. So after I saw that, I went and I entered on that candle I was just showing y'all, and I targeted that swing high right here because that's where the order pairing would take place. Smart money bought down here, and they want to pair their orders where people's sell stops would be, or stop losses would be, my bad, which would be up here. Because if people were shorting up here, thinking the market was going to keep going lower, they would put their stop losses up here. And market went up there, tagged that level, and is wicking that level. So it's probably sweeping it again to come back to possibly go higher, or to come back and take it this low. I don't know. I already made my money for the day. I'm not sure what the market wants to do now. It's not it's not in my interest to worry about that. So that was basically the trade. Let me just finish writing it out. And next was a M1 market order entry. M1 market order entry. I put slash OB because I was basically entering on the order block, which is the last series of down close candles, which was these 1, 2, 3, 4, 5 candles, the last series of down candles that closed and like swept its low and then got closed above. That's the high probability order block. And that was really it. And I could have taken it on a 5-minute too if I would have waited. It was basically like the same entry if I would have waited for this candle to be closed above. But you see, the reason I didn't take that is I wouldn't have got entered. Look, this candle right here, let me get rid of this tool. This candle right here closed above this candle. So if I would have waited on a 5-minute for more confirmation, yeah, it would have been more confirmation because you got these two big green candles closing above this candle. But the market never came back. The market never came back to retest this order block. So I would have just been knowing where the market was going to go and never got entered in a trade. And that would have been frustrating. So I did also use volume profile to help me with the trade, but I literally just learned about volume profile yesterday. So I'm not qualified to speak on it. I know like the bare bones minimum. And I would just be telling y'all a motherfucking lie if I tried to explain volume profile. I'll like throw it on the chart a little bit and kind of show you how I used it. But let me take a screenshot of this first so I can journal it because I still got a journal. 4-hour bullish. It's my higher time frame confluence. 4-hour and 1-hour FEG tag / 1-hour low sweep. The market is dropping the back off now. I made my money, baby. All right. So we took that low, tagged that FEG also. And for me, I don't like to use a fair value gap after it's already delivered to the external range liquidity. So fair value gaps basically are internal range liquidity, and external range liquidity is the swing high. So after price goes like after price comes down and say for example, well, price comes down into internal range liquidity, which would be a fair value gap, and then goes back to that high, which would be external range liquidity. After price comes and touches fair value gap right here, and delivers to the external range liquidity, I'm not looking to use that fair value gap anymore. It's already been used, it's already been mitigated. So if you look right here, this fair value gap right here, it never went to my external range liquidity yet. So when I was trading, which was around here, price had still not delivered. Yeah, it was playing around in here, but the fair value gap had not caused any displacement higher or anything like that. So it was still valid for me to use. That's why I used this fair value gap. And if it would have came down to this fair value gap, um, it had never been tapped into. If it would have provided me with the entry, I would have taken it. But if it's getting closed off and like traded below, I'm not obviously not going to take it because showing disrespect of that level. All right, finish screenshotting, and my entry was right here. It was 222. That's my lucky number, and that's how much I ended up. It's my total right now on my funded account because I made like 300 yesterday, and then today I made 1,000. Well, I didn't make that. Hold on, that's what my total balance is. Today I made 921.90. So my balance is at $1,222.21. And 222 is a number I see everywhere, like literally everywhere. I've been seeing 222 for like the past 4 or 5 years. It's crazy how much I see it. Um, all right, screenshot this. Get the um, notes in there. All right, zoom in. All right, so I'll take this off since I already got the screenshot. Go back, keep the key levels on. I'll take the risk to reward tool off. And this is how I use the volume profile. Not sure if y'all care about this. It's not like something I'm living or dying by. It's not just like concrete. I just wanted to test it out because I've been back testing it. And it definitely kept me out of some bad trades where I normally would take a trade, but it just, based off of how I understand it, it wasn't a good place to take the trade. But I could be completely wrong, and that could have just been complete luck. Not even gonna lie to you, that could just be luck. That I won like that today. I don't know because I don't have enough data. But the core of my strategy is what I know works because I've traded it over, back tested it over like 300 trades, 400 trades. So I know for a fact my core strategy works. This is just like a confluence on top of it to like be like, give me a little bit more confidence. Like, oh yeah, that trade makes sense. So the sweep came down here and it was under the point of control. And I know the little that I do know about volume profile is that the point of control is kind of like acts like a magnet on price, and price wants to like gravitate back towards it. So I seen that, and we were below the value area low, like all the way down here with the sweep, and the point of control was still up higher, showing that, hey, this may just be a liquidity sweep because most of the volume traded in a session is still higher, and institutions are positioned higher. So I think they have a vested interest for the market to go higher. I could be completely wrong. I mean, don't take my word for it. Like, go, please, if somebody's watching this video, leave in the comments if I did this right or if I did this wrong, because I'm just trying to learn how to trade. I'm still on my learning journey. But that was my thinking behind it. So price came down, swept below the point of control, and my entry was a little bit under the point of control, which was right here on this white line. And then the market just shot up. It just went crazy. And I'm done within 30 minutes of trading. That's the dream. So yeah, that's my trade that I took today. I'm gonna go ahead and journal this and go about my day. Man, y'all take it easy. I'll see y'all in the next video.